Hi everyone, today's video is all about mutual fund profiles, those mysterious documents that our banks always send us home with, or documents we come across when trying to do our own research on funds we're interested in. If this is your first time to the Independent Dollar, this channel focuses on financial education. If that sounds like something you're interested in, hit the subscribe button and let's get started on today's video. Here we have a typical example of what a fund profile looks like. So this is the information sheet you're going to come across when you're doing research on mutual funds or you're purchasing a mutual fund through your bank. Now, full disclosure, I did pick this randomly, so I am in no way trying to encourage or discourage anyone from buying it. We're just simply using it today for information and example purposes. So let's get started on the fund details. Now, the inception date lets us know how long the fund has been around for, and in this case, this one started back in 1994. Risk ratings usually range from low to medium, medium to high, and high, and this particular one is low to medium. The benchmark is what the fund managers are trying to beat. Their goal is to generate a higher return than what this index is going to generate on an annual basis. The minimum initial investment in this case is $500, and that's a minimum you must invest to get started. Afterwards, you can add as little as $50 every time you want to buy more of this fund. The unit price or NAV is just under $72, and the assets under management is about $5.3 billion, or AUM as it's referred to, which is the total amount of money that's invested in this particular fund. The management fee of 1.5%, which pays for the fund managers, is already included in the MER of 1.8%. Now, if you're interested in learning more about what a NAV, AUM, or MERs are, check out my video on mutual funds, which explains the basics of these. Finally, the distribution frequency lets us know when income is paid from the investment, how often will we receive it. And in this case, you would be paid quarterly. And the category of this particular fund is Canadian dividend and income equity. Now that we've reviewed the fund details, let's take a closer look at the different allocations. Asset allocation refers to the different investments that makes up this mutual fund. In this case, this one's primarily equity, which is stock. Fixed income refers to things like bonds and GICs. Cash is simply cash, and other would be more non-traditional investments. So things like precious metals, currencies, real estate, things of that nature. Geographical allocation lets us know where in the world does this fund invest. In this case, it's primarily Canada. There's also exposure to the United States, Bermuda, and other would represent all of the other countries where the percentages are just so small that they all get combined into that one category. Industry type allocation refers to the different business industries that this fund invests in. So you'll see at the top there's financials. That's banks. It also has exposures to IT, utilities, communication services, and so on. To take it a step further, the top holdings are going to show us what the top 10 stocks are inside of this portfolio. If you take a look at the bottom, it'll show you that the total portfolio holdings is 52. That means that there's 52 individual holdings inside of this mutual fund. The biggest one being TD Bank at 7.2%. Now let's move on to understanding what these portfolio returns mean. If we take a look at annual compound returns, you'll notice it'll say as of February 28th, 2019. That means if you had invested exactly a year prior to that day, you would have earned 6.1%. Year to date refers to January 1st, 2019 up until February 28th. And since inception is back in the day when the fund initially came into existence. So that was back in 1994. Had you bought the fund back then you would have earned on average an annual rate of return of 10% per year. Calendar year returns, however, are different. They're specific to that particular year. So if you had owned this particular fund for every day of 2017, you would have earned 10.9%. Now, portfolio metrics, I'm just going to touch on very lightly, but portfolio yield is what the fund pays out on an annual basis. Average duration has to do with bonds, and in this case, there aren't any in this portfolio. And standard deviation is a measure of risk and volatility in a portfolio. Now, I'm not going to talk too much about that today because it's a bit beyond what we're discussing, but if anyone does have questions about the portfolio metrics or standard deviation, just comment below. The last area that I'd like to point out is that there's usually a table or a small chart on the fund profiles that lists a whole bunch of different fund codes. And those codes are actually all for the exact same mutual fund. The reason they exist, however, is although the investment is exactly the same, the fees attached to those codes are different. So the platform or the person that you purchase your mutual fund through will determine the type of sales fee that you're going to be charged. If you want to learn a little bit more about that, then I'd encourage you to watch my mutual fund video or 7 questions to ask a financial advisor to understand how sales fees are charged. This wraps up our video on deciphering fund profiles. I hope you found it helpful. If so, please give me a thumbs up and don't forget to hit that subscribe button so you don't miss out on any weekly videos. Thank you so much for watching.